Welcome to Turning Hard Times to Good Times. I am your host, Jay Taylor, and I'm speaking to you from New York City on this, the 26th day of March, 2019. Before we get started with today's show, I want to thank each of you for listening to this show, making it one of the more popular shows on the Voice America Business Channel. Also want to thank our sponsors for making this show economically viable. Our sponsors for today's show are Noble Resources, Triumph Gold, Gold Mining Inc., Uranium Energy, Miramont Resources, Great Bear Resources, and Klondike Gold. I'm happy to be with you again, and I'm also happy to tell you that this month marks the 10th anniversary of Turning Hard Times to Good Times. It has been a lot of fun hosting this show, and as long as the good Lord allows me to continue sourcing and speaking to guests who seek objective truth rather than their own self-serving version of truth, I plan to continue hosting this show as long as I am able. As it was stated on the very first day of this show with Edward Griffin back in March of 2009, unless you properly diagnose the cause of a problem, you can't fix it. And it is most certainly true that those who run our financial system have never even come close to properly diagnosing the root cause of the devastating 2008 financial crisis, which means we are destined to suffer, unfortunately, destined to suffer more of the same in the times to come. Now, that's not some sick, demented wish on my part aimed at getting rich on gold and gold shares. As I have said many times on this show, I am not a gold bug because I take pleasure in making money from systemic economic problems and suffering. I'm a gold bug because I know that the debasement of currency leads to economic dislocations, sufferings, and political strife, such as what we are experiencing in America and in most of the Western world right now. What is required, as Ron Paul pointed out time and time again when he was running for president and before that, what we need is a policy of sound money, which by definition means money backed by gold and or silver. But you need to dig even deeper to ask the question, why did America depart from sound money in the first place? And for an answer to that question, I think we need to examine a spiritual aspect of the human race, which is one reason that I had Dr. Benjamin Weicker on my show last week to dig deeper for reasons as to why Americans, of all people, have chosen the religion of liberalism, which requires us to give up our liberty by treating the state as God. Sometimes digging deeper to find the answers to why we have departed from sound money and other issues, honest capitalism is not as interesting. Sometimes these deeper issues, are not as interesting to listen to as perhaps just trying to figure out how we can make some money and some of the more practical things in life. But it is in my DNA to search for the truth and the real root causes of things because I want to know the objective truth rather than some self-serving political truth. I have to ask questions that may sometimes be somewhat boring to some people, but we do need, I think, to try to figure out exactly what is going on and so we can get to the root cause and try to fix things. So from time to time on this show, I will try to balance out those deeper philosophical questions with what may be of a little more of more direct interest to us, such as the topics of today's show, which I'm going to ask Andrew Maguire to talk about Basel III and gold, what that might mean for the markets, and does it have any practical applications for us? Of course, we're going to be talking to Chris Taylor as well. He is the president and CEO of one of the most exciting new gold exploration companies. That definitely has direct impact on those of us who own those shares. They've done very, very well. And Chris and his company may be on to one of the most exciting gold discoveries in some time. There is reason to believe it could be akin to something as big or bigger, potentially, as the great Red Lake discovery that was the Goldcorp company making project. So this is really exciting, and Chris will be with me after the second, in the second segment after our first commercial break. And as I said, Andrew Maguire will be with us to talk about Basel III. And the guest that we have most frequent on this show, Michael Oliver, who talks about practical things every time we have him on this show. It's really good to have him with us. Again, thanks for joining me, Michael.
Hi, Jay. Good to be back.
It's always good to be back. Now, one of the things that I noticed in your weekend report that really caught my attention, you talked about how T-bonds, the plummeting rates for the T-bonds, Well, they may be, a lot of people may like those, especially people in the equity market may think that's really cool. But you're pointing out it's going to cause a lot of trouble with pension funds and elsewhere. Talk to us a little bit about that relationship between declining interest rates and what the pension funds are going to be facing.
Well, we know that pension funds globally, not just here in Japan especially, they have a demographic problem, the aging, living longer population, so for and younger people not taking up the slack, so to speak. So they have a problem there. But the other problem is that of the assets they normally like to invest in, like safer assets, presumably like government bonds, don't yield anything anymore. In fact, they're negative in Europe and in Japan. And our rates are coming back down again. And this is not because of the Fed. I'm talking about long-end rates, 10-year, 30-year, that type of stuff. Those are moving primarily, in our view, due to an investor class shift away from stocks and into bonds, just as like a safe place to park in the time being type of investment. And we think that's what's really driving the long bonds up in price, down in yield. And but that is a pincer effect. Everybody cheers that in the stock market, thinking, oh, good, lower rates, that's good for stocks. Well, it is up to a point in a bull market that has life in it. But we've got a decade now, an 11-year-old bull market in stocks, assuming we continue up this year, which I don't think we will. That's very old. It's grossly non-confirmed by momentum, and therefore it is at risk. That's the other asset that pension funds have been moving more and more into in the past several years, out of non-yielding bonds. So while the central banks think they're doing the wise thing to stimulate the economy by keeping rates low, they're denying the pension funds a safe, decent yield. And so they've had to take risk. And it's been a shift, gradual but persistent over the last several years, into stocks. So now you're facing the other side of the pincer, which is the stock market, because if it caves, and we think it will, we think it's probably topped, and we may have just seen a secondary top as well a week ago, 2860 S&P. But if that caves, then both sides of the pincer are lethal to the pension funds. And you can go online, they'll take my opinion or word on it. There's much research been done. There's government agencies that monitor it, and there's many private research companies that have issued reports. You can Google them on the pension fund crisis. And they've even categorized some of the states, as in good shape, moderate shape, critical shape. And I think there's about 5 states in the country that are at the critical end, including New Jersey and Illinois.
Yeah.
And it doesn't take a genius to figure out that if you deny them stock return, and if you look back sideways on the S&P right now, there's not been any gain in a year and a quarter. Draw a line sideways from current levels. So it's not yielding right now, and if it drops, then the other pincer grabs the pension funds, and they can't face that, and continue to pay out as they pay out. We think the central banks will panic, of course, if that even begins to reveal itself. And we know that. That's no guess on our part. They've already said as much. And we think the main beneficiary of that will be gold, because the stock market is exhausted in terms of its ability to use low rates. And I think gold will be the prime beneficiary because they will go crazy in the monetary markets. And so to some extent, the bond rally is good for gold.
Yeah, that's interesting, isn't it? I mean, as Jim Sinclair and others have talked over the years, that the only real way out for the central banks ultimately will be to remonetize gold, much as maybe on a much grander scale than what FDR did when he boosted the price of gold up during a fixed rate regime. But, and this is one of the reasons I want to talk to Andrew Maguire in the second half of today's show about Basel III, what might be coming on there, where they're actually going to allow gold to be valued at 100%, just as much as cash and sovereign debt. So that should be very interesting. That's supposed to be coming up at the end of this month. So we want to get his opinion. But so if gold, I mean, it's just, where do you get the liquidity, I guess, is what we're going to be looking for. Where are you going to find the money? Where are you going to find the wealth to bail out these? I mean, can you imagine, Michael, what's going to happen politically when these pension funds go down? These big teachers' pension funds in the city of Chicago and places like that, all hell's going to break loose.
Well, it's a realm of crisis that we didn't have in 2008.
Sure.
And it's only gotten worse since then because the forced low artificial rates and therefore the pension funds have suffered. Yes, they gained because the S&P went up, and so that was saving grace for them. And the first several years of that, we were fully on board with that. MSA actually turned bullish right at the low week in the S&P and said it's a major upturn. But then once you got past 2011, you didn't really have economic growth in any measurable way. It was just, stabilized, and yet the market soared. And it was because of the monetary policy and the interest rate policy.
Yeah,
and that built this papier-mâché plywood skyscraper of the S&P from the 1,300 level all the way up to 2,900 level based on nothing, monetary policy. And when they tried to tighten on that recently, they immediately reversed course. And with no surprise, it revealed their true nature. Right. So they're fully in line now with Draghi and with the BOJ. And if you ever break these stock markets down and threaten their pension funds, they will go lunatic. And we think the prime beneficiary will be the gold market again.
Yeah.
By the way, just as an aside, I know a lot of people are nervous about the miners. But right now, the GDX is trading above its highest close of the entire move.
Wow!
Since the August low.
So the gold shares are definitely outperforming the bullion at this moment.
Yeah, right now they seem to have gotten a life of their own, and it makes sense. We expect the miners to outperform gold on a percentage basis, and also we encourage people to consider subscribing because we also have a gold-silver mining report that is our less expensive product, but we have some strong views on silver right now, and frankly, they're table pounders. We think that silver's better pay attention because I think its percentage upside could be quite stunning.
And I think we might hear something like that from. We might also hear from. We might also hear from our second half guest today as well, Andrew McGuire, on that. I think that's his opinion as well. Well, we've heard a lot of people, be very bullish on silver, and it just hasn't seemed to happen, but one day it will. We know that's true. Well, thank you very much, Michael, for being with us again. Always great to have your insights. I know my listeners are really pleased to have you on every week, and thanks so much for being with us again.